Welcome to My Business Matters, the Michigan Chamber podcast.
Welcome to the My Business Matters podcast. I'm your host today, Jim Holcomb. I'm the president and CEO of the Michigan Chamber of Commerce. Today, we're going to be discussing the state's tax competitiveness with Andrey Yushkov, who is a Senior Policy Analyst with the Tax Foundation. And this is actually the first of a two-part series, so make sure you tune in to part two. It's an important topic. We want to make sure that we cover all the bases for you and get all the information that's pertinent to just a really vital topic here in Michigan as we try to compete for jobs and population growth. Andrey, thank you so much for joining.
Thank you so much for having me, Jim.
Great. Well, the Michigan Chamber, we've always appreciated the independent research and the expertise of the Tax Foundation over the years. I can tell you as a former legislative staffer and as a nonprofit executive with the Michigan Chamber of Commerce, I've relied on your information numerous times throughout the years. I find it credible, find it substantive, and something that really helps us drive policy discussions here in Michigan. And I'd like to start with maybe just the basics of your organization for listeners who may not be familiar. If you could give us a little background on how you describe the work of the Tax Foundation and the core principles.
Yes, absolutely, and thank you very much for your kind words. It's very important to know. So the Tax Foundation is a nonpartisan, nonprofit think tank. We are based in Washington, D.C., but many of our employees, especially on the state team, are remote these days. Mm-hmm. And we actually study and analyze tax policy at different levels of government. So we have a global team, we have a federal team, and we have a state team, and I'm a member of our state team. So we, analyze the entire range of topics from tariffs and the One Big Beautiful Bill and other federal policies to really state and local matters. So issues like local income taxes, property taxes, and of course, taxes that are important for the states. So that's essentially what we do.
Yeah, so you're really covering the waterfront. How long has the foundation been in existence, and when have you started there?
So we have been in existence since 1937, so it's a long time. And I have started a couple of years ago after finishing my PhD.
Oh, great. Yeah, I think that's important for listeners to understand. This is a long-standing organization, and they have credibility, and that's so important. I know in Michigan, and I know across the state when I talk to my colleagues in other state chambers, when you're really trying to get information and have a substantive debate, you have to have organizations like the Tax Foundation to rely upon so you can all start with a common set of facts. And the rankings are so important because that's what legislators and governors are looking at. They look at those benchmarks. We're really concerned here in Michigan. We look at competitiveness. How would you, or where do you rank Michigan, and how would you define competitiveness? What are you looking at in the metrics when you're kind of scoring states?
Yeah, so one of our major projects every year is our annual index. Mm-hmm. Now it is called the State Tax Competitiveness Index. And it is a comprehensive product. So our entire team is working tirelessly from August to October to collect the data, to analyze the data, to produce the index, and to rank the states. So essentially, we use more than 150 variables in this index. So it's again, a very comprehensive product. And we rank different tax structures. So we have 5 components in the index. And those components are individual income taxes, corporate income taxes, sales and use taxes, unemployment insurance taxes, and, of course, property taxes. And in each of these components, we not only assess the rate, right, because the rate is a very important component when you think about any tax, but equally important is the base. So we separate those rate variables and those base variables and rank them separately. And, together we produce our overall index, but we also have ranks for different components. And I encourage your listeners, if they didn't have a chance to look at our index, just go to our website. It's all free. And explore, how different states compare. But speaking about Michigan is doing comparatively well on the index currently. Mm-hmm. So overall, it's number 14. And again, we have 50 states. So you see that it's very close to the top 10. It's not yet there because, well, you need some additional reforms to get to the top 10, but it's still very close. And it's actually in the top 10 on the corporate income tax, and it's number 12 on the sales and use tax, for instance. So it is doing pretty fine. Again, there are some proposals that we will discuss in the second part of this podcast that can hurt tax competitiveness in Michigan. But I would say that overall, currently, it's doing pretty fine.
Oh, good. And you said, 150 different components that you go in there. That's amazing. I think it speaks to the thoroughness of your work. Are they all weighted the same? Are there things that are more important than others when you're looking to put your rankings together?
Yeah. So, again, we have 150 variables, or even more than that now. But we have 5 components, and they're not weighted equally. So we tend to assign higher weights to those components that vary more. So variation on those components is higher, and therefore they are more important from the tax competitiveness perspective. So, for instance, the most important component on this index is the individual income tax component. It's about 30% of the total weight. But again, we are very transparent about the methodology, and we did some sensitivity tests this year, and everyone can go and explore our methodology, and all the weights are public, so you can go and check which components are weighted more than others. But that's essentially the logic. Yeah.
I want to make sure we have good resources for our listeners to make sure they can see your work. Is there a specific website? Can they just go to the internet and Google Tax Foundation? What's the best way for them to be able to see your report?
Yeah, so they can easily go and Google State Tax Competitiveness Index, and they will immediately be forwarded to our website. We have a dedicated page. And also, starting from last year, we have a very useful interactive component. So people can not only go and compare the ranks themselves, but they can also, for a subset of states or for all states, they can explore the underlying variables. So we have the interactive component, and you can, for instance, go and check what the individual income tax rate is in your state and in your competitors, or what's taxable in terms of digital goods in your state versus your competitors. So there is a very useful, specifically for legislators, for business leaders, interactive component, and I really encourage all of your listeners to go and explore our product. And if they have questions, feel free to reach out to me or any other members of our state team.
Yeah, that's great. I would encourage people to do that. I know at the Michigan Chamber, we do that when we're evaluating certain policy proposals. We look and say, okay, if this rate was changed or if this tax was implemented or if this structure was modified, how would that impact Michigan's competitiveness? And it really gives us some substance when we're trying to evaluate them. From your perspective...
Yeah, absolutely.
Oh, go ahead.
And just one thing on that. So actually, if some of your members or legislators, if they're interested in doing test index runs, we can also do that. So we can, for instance, assume that all states remain the same, but say Michigan increases its corporate income tax. We can do this index run and see what the standing would be, right, if this change was implemented. So we also do that for other states, and we are always open to to doing these index runs.
Well, from your perspective and what you've seen over the years at the foundation in your work, how much do business tax rankings impact, say, economic development or talent attraction or investment decisions by individuals and companies in states? I think we all look at it in Michigan is super important and something that we're very much keyed in on. Do you see that on the macro level as well?
Yeah. So, of course, well, economic development, if it's the purpose of your state government, you need to understand the determinants of economic development, of economic growth. And generally, in the economic literature, of course, there are very important factors that contribute to economic growth. So one of the most important factors in all academic studies is investment, of course. And in order to attract investments, you need to be competitive on the tax front and, of course, on many other things. But taxation seems to be important. And last December, after publishing our index, we actually did a little analysis of the relationship between our rankings and interstate migration. Because interstate migration, of course, is also another important factor of economic growth. You want to attract talent. You want to attract people who could, build companies, invest in your state, be talented in various other spheres of life. And what we discovered was that the relationship between state tax competitiveness and interstate migration is pretty strong. Mm-hmm. So states that perform well on our index generally, they tend to attract more and more residents every year. And particularly in the after COVID and in the period after the federal legislation of 2017. Again, there is a very strong correlation between our ranks and interstate migration. And of course, economic development is influenced by a number of other factors. So we don't claim that there is a perfect correspondence between our ranks and economic development per se. But at least, state competitiveness, tax competitiveness matters for attracting talent, for attracting investment, and ultimately for long-term economic growth.
Yeah, I think you're exactly right. What I hear from my members when I talk to businesses looking to come here, it is a global perspective. There's not one single factor that makes a determination in their decision to come or go or to expand here, but the tax competitiveness certainly drives it. And I think you hit on a key point there, the talent attraction. In Michigan, we need to grow our population. We need to have a talented workforce to not only service the current job openings and fill those, but as you try to grow, you need to make sure there are people here. And if you have that wraps into economic development. I think you're right. It really just makes the state more not only competitive on paper, but more attractive in real life decisions.
Exactly. Yeah, that's exactly right. That's what we observe too.
As we look at, as you do your research, what are some of the common policy mistakes? Is there any trend that you see where you see states that try, certain policies and they just seem to not work in many states, but everybody keeps trying them, or something where somebody's just going down the wrong road?
Yeah, so there are multiple issues. One, for instance, is wealth taxation and, taxing the rich. Mm-hmm. And many policy groups on the left and many proponents of progressive tax policies, they continue trying to implement progressive tax policies, particularly in the individual income tax space, but also more broadly. And many states recently have tried to implement surtaxes on the wealthy, say people who earn more than 1 million or more than 5 million, they would be subject to surtaxes or higher marginal tax rates. So progressive states like California, Massachusetts, they have been trying it for years, and Massachusetts have recently implemented this reform. They now have an additional surtax, which makes their top rate 9%. But what we see, and why we believe that it's a mistake, because what we see in recent years is that people who, and business owners, business leaders, who live in those high-tax states, well, they start to relocate. And they tend to relocate to Florida, Texas, and some other states that have a much better tax climate. Well, of course, they have a better climate, Florida generally, than many other states, specifically northern states. But Florida also doesn't have an income tax, an individual income tax. So when you compare marginally what business owners, retirees, and other individuals face as a marginal tax rate in Florida compared to Massachusetts or New York or California, well, people can really save a lot by relocating. So that is one common mistake. Of course, there are multiple other bad tax policy ideas. So in some states, Maryland was particularly bad this year. So they implemented an additional capital gains surtax, and they also increased their top marginal income tax rate. So, a combination of different factors. But we also see some bad policies from the other side of the spectrum, right? For instance, in many states this year and last year, we saw that people proposed to eliminate property taxes. Mm-hmm. And we actually don't think that it's a very good idea because local, property taxes are vital for local governments. And property taxes are more efficient than any other alternatives that local governments have, for instance, local income taxes or local sales taxes. So property taxes tend to be less volatile, and you can actually control revenue growth by using levy limits. That's what we have been advocating for a long time. But we are not actually proponents of eliminating property taxes because, again, this would be another, relatively bad idea. And there are a number of, other things in the corporate income tax space, but I'll probably stop here and we can discuss it, some specific issues if you would like.
Sure. Well, especially to your first point about wealth taxation, it seems like the public, and with the advent of many new technologies, the public is so mobile. You can take your talent, you can take your business, you can take your resources and freely move between states and really make sure you're in a tax-friendly state. And when you do that, it's just an exponential factor of benefit for that state where you're moving to. Those states that are stable, that have broad bases, low rates, that are attracting businesses, that are attracting taxpayers, their tax coffers are growing, which actually allows you to reduce the overall tax rate for many. So you still have the money you need to fund the essential services and fund the government and take care of your infrastructure and things that government should be doing, but it allows you to be more balanced, which, again, just makes you more competitive.
Yes, exactly, and that's what we observe. So in addition to states that I mentioned, Florida and Texas, there are states, for instance, on the coast, states like Idaho. So that's exactly what you described. So Idaho attracted a lot of taxpayers recently, specifically from high-tax states like Oregon, like California, and they were able to reduce their income tax rates recently. Mm-hmm. So, and many other states experience, the same dynamic. So states like Tennessee, for instance, well, they now don't have an income tax at all. They don't even tax dividends and interest income, which they did previously, and they managed to attract a lot of taxpayers recently. And states like South Carolina, they also are very attractive for individuals, for those who want to migrate. And they also recently started implementing considerable tax reforms.
My assumption is, too, the states that are ranking better are states that are tax stable. And I know for the business community, that's one of the primary drivers of where they decide they want to locate or where they can expand or how they invest in their employees and in their customers is stability. They need to have a stable revenue within their own business structure. And when you have a tax climate that's constantly fluctuating, it's hard to do that and hard to plan for the future.
Yes, exactly. So stability is also key. And, even in tax cuts, we encourage states to pursue stable tax policies. So we do not encourage them to really cut individual income tax rates, say, from 5% to 0 immediately or to 1%. Mm-hmm. And what we tend to observe recently is that states that do incremental cuts, they generally do better than states that, cut their tax rate significantly, mm-hmm. and then they have to increase the tax rate back, violating stability. So, again, stability is key. It is specifically important for the corporate income tax code, but also for the individual income tax code. And when your tax system is stable, even if you have relatively high rates. Well, it's predictable, and businesses know what to expect this year, next year, etc. And of course, it's much better for the tax climate and for the tax competitiveness if you have a stable tax code.
As you look at your rankings, how quickly do states either move up or fall down in your rankings? Are states usually kind of within a certain band? Maybe they stay geographically composed because they're competing most with states around each other, or do you see states that are constantly moving up and down your rankings?
Well, there are some states that implemented really dramatic reforms in recent years. I could name a few. For instance, Iowa. It had a very complex tax code, and they had a very high individual and corporate income tax rates, but they improved dramatically in recent years. So now they have this year they have a flat individual income tax already. Mm-hmm. And their corporate income tax has also improved dramatically. Also, states like North Carolina, they did some reforming there. And also this year, Louisiana was one of the states that improved their tax system dramatically. So again, every year you see states that, of course, move up and down. And it's not very common that states move, 10 or 20 ranks on our index. Mm-hmm. But incrementally over time, say in 5 years and 7 years, we saw several states that really moved from the bottom 10, like Iowa, to almost the top 10 or very close to the top 10. Mm-hmm. So it's definitely possible, and we encourage states to be responsible, to maintain stability, but also, if they see that their tax code has become less and less competitive, especially because their neighbors did significant changes, then of course we encourage tax reform, and we help states implement responsible tax cuts and implement responsible tax reforms. So you can always find materials on recent reforms on our website. There are multiple examples.
We're speaking today with Andrey Yushkov. He's the Senior Policy Analyst at the Tax Foundation, and we're getting to the close of this first part of a two-part series. And Andrey, what I'd like you to close with, if maybe there's one thing or a couple things that policymakers should be thinking about and looking at when it comes to building a smarter, more competitive tax climate in Michigan.
Yeah, so Michigan, again, it faces competition not only from its direct neighbors, but also, again, from states like Texas and Florida that are very, very attractive to taxpayers. So when you compete with those states, you need to understand that, of course, competitiveness is a relative concept. So, of course, you may be competitive vis-a-vis Wisconsin or Minnesota or Illinois, mm-hmm. but you can still be relatively uncompetitive vis-a-vis Florida or Texas or even Indiana. So I would say that looking at what your neighbors and what your competitors are doing is key, and thinking about implementing smart tax reforms. So if you see that your budget is relatively balanced, so expenditures do not exceed revenues, then you can, of course, think about some tax reforms. And I'm sure we will discuss some of those reforms in the second part. But there are still a number of reforms for Michigan to consider, both in the individual or corporate income tax space or even in the sales tax space.
Yeah, well, certainly, tax structuring a competitive tax climate is a complex issue and something that we're really appreciative to the Tax Foundation for their contributions of information over the years. And as we go forward, we're going to rely on that. Today, a very special thanks to Andrey Yushkov. He's the Senior Policy Analyst at the Tax Foundation for a really informative conversation and helping us unpack what can make Michigan more competitive in the tax space. Thank you to all of you for listening. And working together, we must insist that our policymakers focus on ensuring Michigan has a tax climate that doesn't penalize success, encourages job creation, and population growth. Please make sure to tune in to part 2 of this series as we stay focused on Michigan's tax climate. Subscribe and like to our podcast for easy notifications. And until next time, go to michamber.com For more information on tax policy issues impacting you and learn how you can engage with the Michigan Chamber to push for a pro-taxpayer agenda that will benefit us all.